Hey there, I am back. So what happened? I apologize. I had a death in the family on the East Coast, actually in West Virginia. I had to head back there for the funeral, and then I got back late last night, thus my groggy eyes. So what I'm trying to do right this morning is I'm scanning the airwaves to see what information out there should play a role in housing. And I don't really know what's going on with housing prices because they're so localized, and I'm going to prove that data here in a second. But what I can do is give you at least some read on where I expect interest rates to go, because that's going to be a big conduit of what happens with housing as well. Can you afford a house in 2023? So when I'm scouring the airwaves, here's what I see. The first thing I come across in CNBC, and I clicked up here in the business section, I hit real estate, is this. We're going to scrap the Trump thing because I don't want to get political on the channel. But you can see right here, home prices hit record high in 60% of the U.S. housing market. That's what I want you guys to focus in on, because you're going to have people in mainstream media and also other channels saying housing market is crashing. Well, if you pick the other 40%, you can probably find some pockets that have been down double digits. And I called that. I said, if a housing market in your area, if you're up 40 or 50% in the last 2 years, you're probably going to see a reprieve in those values. And you might see factors all the way up to about a 15% decline. That's what I called at the end of last year. But I said, overall, the market's going to be basically stagnant. So you're going to have, maybe 50% of the housing market down a little bit and 50% of the housing market up a little bit. So I called basically for the whole year of being zero. Okay, so what you're seeing here is home prices hit a record high in 60% of the U.S. housing market. So what housing markets are those? Well, that's a new area that we're going to help you guys in with how to vet realtors. Okay, so it depends on where you live in the country. That's the really area you need to focus in on. How do you do that? Well, you get a qualified realtor. So what we can do, we're offering a free service for you guys out there. If you're in the market of buying your first house and you're like, Dan, I just don't know anybody in the area. I go to realtor.com and I don't know about that. I went to an open house and that realtor, I don't know about them. What can I do? Well, do me a favor. Click the apply now button down below. What it's going to do is it's going to ask you a few questions. Based on those questions, within 24 hours, we're going to get with you and we're going to answer any questions that you have. If the main question is, I need a realtor in an area, you give us a specific area, which you're looking for, we're going to help you with that service. But let's get over the data that we have for today. So if you go down through here, what are we seeing? Here's how much cash you may have in your house thanks to record high appreciation in homes. So we're seeing another caption saying house prices are still up. Home equity hits near record high as house prices keep rising. So this is kind of contrarian to what a lot of people are saying, that there's going to be a housing crash. I said there was going to be a housing crash in units. I didn't say in values, and that prediction is still holding up. So that's the main topic that we're seeing right now in the housing market. House prices continue to rally. When I go to the Yahoo Finance, can't really find anything in real estate there, but the market's liking something this morning because the S&P's up 18, Dow Jones is up over 100 points, and we got the NASDAQ almost up 100 points. So there's some data coming in there that I really, I can't figure out why the Dow Jones is up right now, but let's get over to the economic calendar to look for maybe is there news today or this week that could be a catalyst to the markets and help maybe even drive interest rates down. Well, on Mondays, there's very, very rarely on Mondays do you have any economic data. So let's go up to here and see what Monday looks like. So no news on Monday. Tuesday, all we have is the energy outlook. So I'm really not concerned with that because oil prices are going like this and like that. And I'm going to go give you a little bit of context here on that in a second. But then on Thursday and Friday, we're going to have some huge numbers. What are these numbers? Well, the numbers that the Federal Reserve focuses in on. Inflation. So on Thursday, we have the CPI. Think of the CPI as consumer inflation. Starts with a C. Okay. The next thing is on Friday, we're going to have the PPI. Well, the P means producer. And then the PPI means producer inflation. So what we're going to monitor is what's going on with this inflation stuff, because that's what the Federal Reserve is mainly focused in on. So if we break down these numbers, we're going to have 3 numbers through here and 1 number down through here. So we got core CPI, and then it says month over month. And then we have CPI year over year. That's what YOY means. And then CPI MOM means month over month. Okay, so what CPI is it's basically they take a basket of goods and services like, energy and food and shelter and clothing and entertainment and all this other stuff, and they put a price tag on it. And then they monitor it. They monitor it either month over month or year over year, okay? But what the core inflation numbers is, it was what that strips out or pulls out the energy numbers and the food numbers. Why? Well, last night I was driving home, and in Illinois, I hit the border, and the gas prices were $3.87, okay? That was last night. On my way to work this morning, I wish I would have filled up last night, I needed gas. What was the gas prices this morning? $4.27. In less than 24 hours, it went from $3.87 to $4.27. So that's why they strip out the food and energy on the core. So the last reading on core inflation was up 0.2%. They're expected that to come in right at 0.2% as well. Here's where I differ a little bit. They have the CPI year over year. Last reading came in at 3. They expect it to go up to 3.3. Don't think it's going to go up because I'm seeing, in the inflation numbers on energy have dramatically down. And now we're getting more and more data or current data on the shelter numbers that we went over last week in videos, that those are dramatically down. So I'm expecting this to come down. If we teeter in the 2% range, you're going to see the markets rally. If this number goes from 3 to 3.3, you're going to see a kind of some little hiccups, I guess, in the markets because of that. So we're going to wait on till Wednesday to figure out that number. And then the CPI month over month, they're expecting it to come in. The previous reading was 0.2. They're expecting it to come in at 0.2. So if you see this, it says core inflation month over month went from 0.2 to 0.2. The main inflation number they're expecting to go from 0.2 to 0.2, but they're saying it's going to go, the year over year is going to go from 3 to 3.3. Don't see how that's going to happen. But the other piece of this equation we're going to watch is the jobless numbers. How many people filed for the first time that they lost their job? Well, the Federal Reserve is applauding this number because they want it to go up and up and up. They want more people not working, I guess, is the negative there. So they're expecting the last reading came in at 227,000 people filed for first-time unemployment claims. They're expecting that to go up to 230. Only time's going to tell on that. And then on Friday, the producer numbers. We're going to look at where producer inflation's coming in. They said the reading previously was 0.1. They're expecting that to go to 0.2. I'm expecting this to stay flat. A 0.1 or 1/10 of a number isn't really anything to, write home about. So we're going to leave those numbers as is. So then the next thing we want to look at is we go over to what the Federal Reserve is expected to do at the next meeting based on the numbers that we're having now. So we're going to have numbers. We're going to monitor this all through the week. And then on Thursday and Friday, as the inflation numbers come, we're going to see if these numbers change. So what this website is actually the CME, so the Chicago Mercantile Exchange, and they have a tool. It's the Fed Watch tool. What does it do? Well, it actually does this. What's the likelihood the Federal Reserve will change the Fed target rate at the next meeting that they have? Well, that next meeting is coming up in 44 days, 4 hours, 24 minutes, and 37 seconds. So what's expected to happen? Well, nothing right now. So right now, the federal funds rate is between 5.25% and 5.5%. You're seeing that right through there on the screen. What's the probabilities of it's going to change? Well, no indications say that the Federal Reserve is going to raise rates by the end of the year. And you have that right through here. Okay, so these are the probabilities of the Federal Reserve changing rates at the next couple meetings. And they keep saying, well, they're probably going to raise rates one more time in 2023. Well, based on the Chicago Mercantile Exchange, the futures market, it doesn't look like that's baked in the cards. Right now, there's an 85% chance it's going to stay steady right where it is right now. And then there's a 70% chance that it's going to stay steady, and then from there it starts to dissipate. You can see through 2024 they're expecting rates to come down throughout every meeting almost next year. They're expecting the Federal Reserve to cut rates. So based on any news that we have out this morning, what in the world's going on with mortgage rates today? Well, this. So what you see on your screen right now is what I monitor on a daily basis. Why? Well, because when you talk to a lot of people, they're like, Dan, I follow the 10-year Treasury over there. And my point is, why? Why do you follow that when there's actually a mortgage bond that trades on Wall Street that you can follow that's yield is the biggest component of your mortgage rate? So we follow the MBS market, and you can see that right up through here. What this is telling us right here, this is the number or the price of the mortgage-backed security bond. All you need to know is this. If this number right here is red or negative, it means the price of the bond is coming down. What happens to interest rates or yields on bonds when the price comes down? Well, there's an inverse relationship. It's a flip-flop. So when the price goes down, interest rates go up. So we're probably going to see about a 0.05 adjustment in rates today on the uptrend. Where are rates right now? Well, these are where they ended last week. So you might see a lot of captions saying, hey, mortgage rates just hit a 25-year high. Well, they haven't, guys. So here's where rates are. So these are the top 6 programs people use when they're buying or refinancing a house. This is by Mortgage News Daily. They post this every day. What they do is they survey lenders all over the country and ask them, if you had a borrower, first-time home buyer, buying their first house, single-family home, it's going to be their primary residency. Okay, so those 3 factors. They have a 740 credit score and they're putting down 20%. This is where a lot of people are like, Dan, my rate isn't that. Why? Well, you're not putting down 20%. But if you were, this is most likely where your rate's going to be. Okay. If you focus in on the 30-year fixed rate right here, you can see the 52-week high and low. And they're kind of little numbers. So squint down here. The 52-week low was 5.09. The 52-week high was 7.37. So you're seeing that right through here. Okay, even with the reprieve last week on Friday, mortgage rates kind of tumbled a little bit. They were down 0.17, almost 0.25% across the board. We had a big rally in the markets. The rates still weren't at 7.375. So we are at 7.03 right now, not we, but the national average out there. If you want to find out what you qualify for, what your rate would be, or Dan, I need a realtor, like you said at the beginning of the video, what do I do? Well, go to the rate update. Here it is right here, folks. This is my website. Who am I? My name is Dan Frio. I do this report every day. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. Would love to help you do a few things. 1, don't disqualify yourself. Can you qualify for a mortgage? Let us help you determine that. How do you do that? What's the best way to reach us? Going to show you that in a second. However, the next one is, Dan, I don't know my market. How do I know if it's a good time to buy? Should I just renew my lease? What should I do? Well, that's another reason why to click the Apply Now button right over here. What we're going to do, it's going to ask you a few questions. Put in there, need a realtor. What we're going to do is get in touch with you, find out what kind of house you're looking for, what area you're looking for. We're going to match you up. We're going to vet a realtor for you. But if you're out there and you're like, Dan, I want to see if I can qualify for a house. What can I do? Well, the main thing you can do is right through here. The first thing, give us a call, 844-775-5626. Now, if you can't get a hold of us from there, the next thing you can do is just hit the Apply Now button. It's going to ask you a few questions. You don't have to do a complete application at that time. It's going to ask you some questions. What we're going to do is review your questions, get back with you to answer those. You can let us know if you want us to call you, text you, or email you, and we'll do that. And then we'll put you on a path to wherever you're looking to do. So my name is Dan Frio. All I ask you to do is do me 2 things today, if you would. Please give us a thumbs up, subscribe down below, so every time I post a video, you get an alert. God bless, guys. Thanks so much for watching. Take care. I'll see you tomorrow. Bye-bye.